The next topic we're going to cover is getting your finances in order, which is the number one item that affects the saleability of your company. Okay, I don't want to scare you. I'm going to talk about numbers now, but my goal is at the end of this lesson together, numbers and finances don't scare you anymore. Let's change the way we think about numbers in our business. Some of us keep scorecards in our business. We track key performance indicators like revenue, sales, marketing, conversion rates, customer satisfaction ratings. Well, your financial statements are no different. They're just another scorecard. A scorecard that determines the value of your business. It's what business brokers and investment bankers use to value your company, what buyers will use to determine the price they pay for your company, and what bankers use to determine whether or not your business is valuable enough to receive financing. This is critical. This piece alone is responsible for half of all deals dying. Books and records is also the number one determining factor whether you receive cash at the closing table or creates the need for significant seller financing. Equally as important as selling your business for maximum value is getting the most amount of cash at the closing table. When it comes to finances and how finances affect business valuation, there are a variety of areas that you need to address. We can't cover all of those in this course together, so I'm going to focus on the 3 most important areas. We will cover 2 today and the last in our next session together. First, keep your books updated and review them quarterly. And when I say review, I mean personally review the numbers. We've had plenty of clients that have entrusted their bookkeepers, controllers, and accountants to manage the books and still have issues in a deal process. This isn't because your bookkeepers are bad people or they're doing something wrong. It's because no one knows all of your expenses better than you as the owner. This exercise is even good just for finding profit. Last year, I increased the profit in our business by 40%. The way I did it? Simply reviewing our expenses quarterly and asking the questions, is this still working? And is this still necessary? How many of us have seen subscriptions on our personal credit cards months after you thought you canceled them? You know, Showtime after Billions was over, the healthy meal delivery you thought you would use, the gym you haven't been to in 12 months. I know I have. It's the same in your business. Okay, number 2, benchmark your business against the industry. Using a tool like bizminer.com, you can access an example of an average company in your industry. You can see on average what those companies spend on each expense item by percentage. Let's go over an example. We had a client that's in the salon industry. 2020 was a rough year for salons. However, we took an industry comparison report versus what they were spending their money on in 2021, and we found that they were overspending on rent, payroll, insurance, and marketing. The client was able to renegotiate most of those expenses. The result was that instead of projecting a loss, the client is now projecting the highest profit the company will have ever seen, even though their revenue will still be down. In business valuation, revenue is vanity, profit is sanity. Valuations are complicated, but essentially, the valuation of your business is a multiple of your earnings. For every dollar that drops to your bottom line, you're paid $2, $3, sometimes even $7 for it in a sale. So every expense you save in this exercise not only gives you extra profit, but immediately delivers a multiple of value to your exit. Now that we've learned the first 2 methods on controlling your valuation through financials, you have a bit of work to do. After this lesson, complete the worksheet. Decide the dates for your quarterly financial review and send your bookkeeper an invite. Also identify 3 to 5 expenses on your profit and loss statements that you're going to renegotiate or remove. Remember, every dollar that drops to the bottom line pays you a multiple.